Welcome to Crypto Accounting. Today we're really thankful to CryptoCrater.tax. And what they did was they gave us a bunch of material that they give away for free, and they want people to know what to do. And then if you want to get involved with their software, it's pretty awesome, and it helps you, finish your taxes. And we encourage everybody to seek professional help unless you're a self-employed genius, like a lot of people are. Okay, so as the IRS continues to focus on audits, keep in mind you've got to report stuff, okay? So understand the implications. So number one, per the U.S. government, as discussed in the 2014 Virtual Currency Guidance, the IRS treats all cryptocurrencies like Bitcoin as property, not as currency. This means capital gains and losses tax reporting rules apply when investing in cryptocurrencies, just like they do with other forms of property like stocks, bonds, and real estate. Expanding on this, whenever you dispose of cryptocurrency, either by selling, trading, or using it to purchase goods or service, you trigger a taxable event and incur a capital gain or loss on the transaction. This gain or loss is a form of income and needs to be reported on your tax return. You dispose of your crypto and incur a taxable event when one of the following occurs. You either sell a crypto for fiat currency like USD, trade crypto for another cryptocurrency, or spend crypto to purchase a good or service. Keep in mind, transferring crypto from one wallet to another is not a taxable event. You're not getting rid of crypto when you move it somewhere. You're just moving it around. Here's an example. Lucas buys one Bitcoin for 10 grand. 2 months later, he sells that Bitcoin for 12 grand. In this simple example, Lucas has a $2,000 capital gain upon disposing of his Bitcoin. He then reports this $2,000 gain with his taxes. Depending on what tax bracket Lucas falls under, he does pay a certain percentage of tax on his gain. Tax rates fluctuate on your income tax bracket, as well as depending on whether or not it was a short-term or a long-term gain. Here's another example. Lucas buys one Bitcoin for 10 grand. 2 months later, he trades half of the Bitcoin for 10 Ethereum. This is still considered a disposition of his Bitcoin, trading the BTC for ETH. Therefore, Lucas needs to calculate his gain or loss. To calculate how much he gained or lost on the trade, he needs to know what the fair market value was. Let's say the 10 Ethereum were trading at $4,000 at the time. In this case, Lucas would incur a $1,000 capital loss because he sold half his Bitcoin that he acquired for $5,000 for $4,000 worth of ETH. Remember, you can significantly reduce your overall tax bill by filing your crypto losses. And remember, you can significantly reduce your overall tax bill by filing your crypto losses. And don't miss out on these tax savings. Earning crypto. Crypto that you earn from mining, staking, interest accounts, a job, or other sources is not treated as capital gains. Crypto earnings need to be reported differently from capital gains and losses. Example, Mitchell runs a cryptocurrency mining rig in his basement. Every week he earns 0.02 Bitcoin from his mine. From a tax reporting perspective, Mitchell recognizes income equal to the fair market value of the Bitcoin at the date and time he receives the mining payout. So on July 2nd, when he got 0.02 Bitcoin, at this time 0.02 was worth $200. Therefore, Mitchell recognizes $200 worth of income. So it's sourced at the time of receipt. Quick summary here. All crypto sales, conversions, trades, payments, donations, and earned income are required to be reported by U.S. taxpayers on their tax. Step 2, organize your data. Once you have a baseline understanding of how this is working, you need to move to step 2, organize your data. To do this, you need to calculate your capital gains and losses. So make sure you pull together your transaction history from each exchange you traded on, your records for earned crypto, your records for any gifts sent or received, records of crypto received from airdrops or fork events, and any other transaction history you might have. For the average investor, the process is really easy. You just pull your transaction history from your crypto exchange like Bitmart or Binance or Kraken. Once you pull together all the records, you're ready to move on to the next step. Step 3, calculate your gains and losses. Once you have gathered all your trade information, you're ready to calculate your gains and losses and report them on IRS Form 8949 if you live here in the US of A. To calculate your gains and losses for each of your crypto disposals, apply the formula below. It's simple. Fair market value less the cost basis is your gain or your loss. So fair market value is how much your crypto is worth at the time of the sale. Cost basis is how much it cost you when you acquired the coin. Step 4, sum up your net gains and losses and transfer the total to Schedule D. After your taxable transactions are reported on 8949, sum up your transaction history to arrive at your net loss or gain and transfer this total to Form D, the form used to report capital gains income. Step 5, report any income earned in crypto. Remember, income earned by mining, staking, interest, blah, 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 also needs to be reported. The amount of income should be reported should be based on the fair market value of the crypto at the time you received it. And that's pretty much a rule of thumb with all this kind of stuff. Okay, step 6, remember to include your crypto tax forms with your tax returns. So once you completed Form 8949, reported your income, you're ready to file. Look, if you're going to hire a professional anyways, just give them all this stuff and you don't have to worry about it. But I assure you, the best way to play is to play by the books, report your income, and then don't forget to report your losses. None of us are perfect, not all of us invest in Tweak. So some people have losses. So thank you for listening to that. And remember, get the free download from CryptoTrader.tax. They supplied us with the information for today's show. They've got a lot more information. And then go out and find yourself a professional, in my opinion, and let them handle this end of it.